Good morning, this is Naeem Azam, Chief Market Analyst at Evertrade, and welcome to our daily technical analysis video, folks. Gold price is looking very bullish. So let's have a look at the price action and let's see what exactly it means in terms of its support and resistance levels. After all, this is what all investors and traders pay most of the attention to. Now, in terms of our fundamentals, we will also try to read some of the fundamental news and then try to make sense of that. But before anything, it is important for me to go through this slide of disclaimers and risk warnings. Anything which we'll be discussing in terms of this particular video cannot be perceived as an advice. If you are seeking for one, please do consider consulting with your own financial advisors. Now, as always, I'm going to bring out the MT4 platform and we are going to look at the gold price. So the time frame that we will begin, as always, is going to be your daily time frame. Your daily time frame meaning that this represents an opportunity for those traders who like to mostly buy and hold for a longer period of time, and a smaller time frames such as intraday time frames. And intraday time frames are those such as like 30-minute, 50-minute, 15 minutes, or 5 minutes. They are for those traders or investors, well, you wouldn't really call them investors, more like traders who are likely to take advantage of the price of a smaller price moves. So whether those price moves could be to the upside or to the downside, but these traders are very, very active. So they go on to smaller time frame. But the passive traders, and these are the traders who like to buy on a bigger trend, whether the trend is to the upside or to the downside, uh, they look for a bigger time frame, and for that bigger time frame they are likely to focus more on the daily and weekly or monthly time frame. Monthly is, for the investors who like to buy and then just forget about it, for a few years and then come back and then have a look at it. But the daily investors, they wanted to have a look at the price maybe at least, once or twice a week, and then see what the price is really doing. So that is what the daily time frame is really all about. So as always, the three different important moving averages, which are on your chart right over here, they are as follows. And the reason that I choose them is because these moving averages are more prominent among institutional and hedge funds. So the first one in green, this is your 200-day moving average. So this is nothing in simple terms, but just the average price for gold over 200 days. Then the next one comes your 100-day moving average. Once again, this is nothing but your 100-day moving average, 100-day average, price average, and then finally your 50-day price average. All of these ones, they are simple day moving averages. Now, in order for you to put them on the chart, all what you got to do is go to insert, indicators, trends, and then moving averages. This strategy to trade the moving averages is very, very simple. Now, for instance, let's say that the price goes above this moving average, like how it did right over here, right? So the price crossed above this particular 50-day moving average right at this point. So the moment the price crosses above the moving average, what do you do then is you buy. And the moment the price crosses below the moving average, like how it did over here, what you do is you put the other trade on. So you sell, because remember, on this platform, you are not trading the physical gold, you are trading the asset, a derivative. So you can go long, meaning you can buy, or you can sell. But for investors and traders who are very, very basic and very, very new to this world, what they can do is they can buy as the price goes above this moving average, and they can close, meaning they can take their profit off as the price crosses below this 50-day moving average. But at the same time, for investors and traders who believe in a long who wants to take less risk, then what they want to do is they may want to pay attention to the 50-day moving average. So right over here, so they would have gone into this particular price action. They would have bought gold prices the moment the gold prices went above the 200-day moving average, like it did right over here. But in terms of profit taking, in terms of calling that, because at the time, remember where the price was. At the time, the price was really trading at 1500, and right now the price is trading at 1800. So you can see there is there's a very decent price movement happened ever since then. And even before that, the price went all the way to 2000 as well. So you had several different opportunities with respect to the price levels if you would have paid attention to this just very simple price level, which is your your moving averages. That is why I really like to pay a lot of attention to these particular moving averages. Now, in terms of our fundamentals, when we look at the price, what we got to look at is, okay, so what exactly is news in relation to gold price? So this is your Bloomberg terminal, so do not worry about too much. I mean, this is for professional traders anyways. So but what I'm going to do is I'm going to read a couple of headlines and I'm going to teach you how to make the sense of those headlines. So the first one, it says the price of gold fundamental daily forecast. Doesn't really mean anything. This one says gold climbs as improving sentiment pressures dollar. So what this particular headline right over it means is that, okay, gold prices is moving higher because of dollar. So what do I mean by that? So the meaning for that is that the gold prices are moving higher because dollar, which is sitting right over here, I mean, you trade everything against the dollar price is moving lower. So that is what pretty much is going on. And the reason that gold a dollar price is going down is because US is talking about its next stimulus negotiation. So if this stimulus negotiation does take place, then that means, obviously US is holding a lot more debt. So the dollar prices kind of will move lower from there, and that it is likely to be very negative for gold prices for the dollar price from that perspective. So again, going back to the conversation of gold prices with respect to its support and resistance zones. Now, what is a support and resistance zone? So resistance zone, as you can see right over here, this is an area where prices are likely to return or reverse their momentum. So this particular area right over here between 1958 to 1974 is highly likely to be the area if the price continues its momentum. Let's say if the price continues its momentum from here to here like that, and then we are expecting the first profit taking happening right over here, which can push the price to the downside. However, remember the importance of 50-day moving average, which is trading right over here. So if the price continues its momentum like that to the upside, the moment that it will come into this area 50-day moving average, this can also act as a resistance as well. So price can potentially find, so this could be the area where you want to take some profit, you want to book some profit off the table. So the resistance areas, the first one right here is going to be your 100-day your 50-day moving average, which is right over here. But then the another important area is going to be right over here. So now you understand where those important support levels are. But then the question comes that, okay, Naeem, you've explained all about that. What about the buy area? What is the good price for gold to buy? So for me, that really good price in terms of a gold prices remains at these price levels, as you can see. So this is the price level that I really kind of expect the price to come over here, and then if it comes over here, it is likely to move. But because this price level is just below the 100-day moving average, and if the price breaks below the 100-day moving average, it is likely to weaken the sentiment. So what we need to do is we need to define a price level which is going to give us a better level of entry with more confidence, and that level which has more confidence is going to be where I am going to draw my trend lines right over here. So that runs between 1878 to 1886. You can just literally move this one a bit more lower, bring it to 1880. So if the price comes and revisits these levels, so this could be a very good area for you to get back into the game, and then look for that large move, to do that big momentum move to the upside. But remember that if the price does revisit this area, that also means weakness as well. So that is why I like more this area of support, but this area right over here is more likely to act. So to summarize, the price is moving above the 100-day moving average, which is positive, and this means the price is likely to likely to continue its journey to the upside. If it continues to the upside, this is the area right over here where we can see some sort of a profit taking. But if the price falls and we see another resistance, this is the area where we see that the price, entering and then possibly moving back to the upside. All right, folks, that's all for today, and I'll see you guys next time.